Let's just say it plainly, 2025 was not the year crypto investors were hoping for. After all the excitement and optimism heading into the year, the market delivered one of its most disappointing performances in recent memory. But rather than dwell on the pain, we've got something useful for you today. A comprehensive annual crypto report has just dropped, and we're breaking it all down in plain language so you know exactly where things stand and what to watch for going into 2026. Welcome to Web3verse, let's get into it. The report opens with a broad overview of the crypto market, which wrapped up 2025 with a total market cap of around $3 trillion. That's actually a 10% decline from 2024, making it the first year since 2022 where the overall crypto market cap finished lower than where it started. And here's the frustrating part, it didn't have to be this way. The market was on a promising trajectory early in the year, reaching an all-time high of $4.4 trillion. Then October happened. President Trump announced sweeping 100% tariffs on China, and the crypto market collapsed almost instantly, with close to $20 billion in liquidations wiped out in a single day. That one event essentially erased 2 full quarters of gains and flipped investor sentiment from bullish to defensive almost overnight. The fallout was swift. Investors rotated out of altcoins and into stablecoins, killing any hope of a long-awaited alt season. Bitcoin dominance finished the year at 57.4%, while ETH and most altcoins lost ground. The only standouts were BNB and stablecoins. If you're wondering just how rough Q4 was, here are the numbers. Bitcoin itself dropped 23%. Ethereum fell 28%. XRP was down 35% and Solana slid 40%. Further down the risk curve, it got even uglier. DeFi tokens like Link and Hype dropped over 40%, while AI tokens were slammed across the board. In the memecoin space, SHIB fell 42%, Doge dropped 50%, and Pepe lost 57% of its value. It was, by any measure, a brutal quarter. Meanwhile, traditional assets told a completely different story. Gold surged 62% across 2025, making it the single best performing major asset class of the year. US equities also held up well, with the S&P 500 gaining 17% and the Nasdaq up 21%. Bitcoin, by contrast, ended the year down 6%, the third worst performer overall, only ahead of crude oil and the US dollar. Gold's exceptional run, driven by geopolitical tensions, central bank accumulation, and tariff uncertainty, raised serious questions about Bitcoin's status as a safe haven asset. It also caused BTC to decouple from tech stocks, a historically unusual development that's worth paying attention to. Despite the overall gloom, a few areas held up surprisingly well. Memecoins and AI tokens actually topped the narrative charts for the second year in a row, though interest in both has cooled compared to 2024. Memecoin-related categories dropped from 30% of investor attention to 19%, and AI crept up only slightly from 15% to 17%. Solana maintained its position as the most popular ecosystem throughout the year. On the security front, 2025 was a rough year for the industry. The biggest story was the Bybit hack in February, the largest crypto hack ever recorded, where North Korea's Lazarus Group stole $1.5 billion in a single attack. In total, $2.38 billion was stolen across the crypto industry in 2025, with Bybit accounting for the bulk of it. One area that genuinely thrived was digital asset treasury companies, which collectively spent nearly $50 billion acquiring crypto during the year. By year-end, these firms held over $134 billion in crypto assets, up 137% from 2024, including more than 1 million BTC and 6 million ETH combined, representing over 5% of each asset's total supply. Prediction markets also had a strong year, with notional trading volume jumping over 300% to reach $63.5 billion. Perhaps most interestingly, sports betting overtook political prediction as the dominant category, making up 90% of trading volume on leading platform Kalshare by year-end. This is a space worth watching closely in 2026. Let's zoom in on the 3 biggest names. Bitcoin hit an all-time high of $124,000 in early October before the crash pulled it back sharply. It fell below $100,000 in mid-November and hadn't recovered by the time this report was published, finishing the year down 6%. The October liquidation event also hit Bitcoin miners hard, squeezing profitability as the hash rate dropped 14% in Q4, though it had actually hit a record 1.3 zettahashes just days before the crash. US spot Bitcoin ETFs recorded their first ever quarter of net outflows in Q4, losing just over $1 billion. Still, they finished the year with $120 billion in AUM, up 13% from 2024. BlackRock's IBIT remained firmly in the lead with 57% market share. Ethereum peaked just below $5,000 in Q3 before sliding 28% in Q4 and ending the year down 11% overall. Ethereum ETFs flipped from strong inflows in Q3 to outflows in Q4. That said, a brief bounce following the Fusaka upgrade in December showed that positive catalysts can still move ETH. With the Glamsterdam and Hakata upgrades expected in 2026, there's reason to be cautiously optimistic. Transaction counts across Ethereum's broader EVM ecosystem also surged 90% in 2025, a sign of real underlying growth even if ETH's price didn't reflect it. Solana had one of the tougher endings of the three, falling 50% in Q4 and finishing the year down 34% overall. The much-anticipated spot Solana ETFs were finally approved in mid-October, but didn't begin trading until November due to the government shutdown, and by then market damage was already done. Despite that rough start, Solana ETFs did manage consistent inflows and finished with nearly $950 million in AUM, a solid foundation to build from in 2026. DeFi took a significant beating in Q4. Total DeFi market cap fell from $160 billion in early October to just above $100 billion by year-end. Lending protocols dropped 26% in TVL while DEXs fell 29%. One notable exception was tokenized real-world assets, which actually grew, largely because gold and precious metals were top performers in 2025 and their tokenized versions captured that momentum. RWAs grew nearly 7% to $17 billion by Q4. The NFT market also struggled. Trading volumes dropped 46% in Q4, with Ethereum NFT holders rushing to sell blue-chip collections like CryptoPunks and Pudgy Penguins, sometimes at a loss. Solana and Polygon held up much better, with Solana NFT volumes barely moving at all. Tokenized collectibles appear to be keeping some life in the NFT space, and that could be an emerging trend worth tracking. On the exchange side, annual spot trading volumes actually grew from $17.4 trillion in 2024 to $18.7 trillion in 2025 despite Q4 weakness. Binance maintained its dominance with 40% of Q4 trading volume. In the decentralized exchange space, the top 10 DEXs doubled their annual trading volumes from $1.8 trillion to $3.6 trillion, a standout performance. Perpetual DEXs were equally impressive, with a 346% jump in annual volume from $1.5 trillion to $6.7 trillion. So where does all of this leave us heading into 2026? Honestly, it's a mixed picture, but not a hopeless one. The October liquidation event was a defining moment that reset market sentiment and delayed what many expected to be a strong finish to the year. But conditions are slowly shifting. The fear and greed index is recovering, the total market cap is showing early signs of life, and Bitcoin dominance beginning to ease could signal that capital is starting to rotate back into altcoins. The narratives to watch closely this year include tokenized real-world assets, which institutions are embracing at a rapid pace. Tokenized collectibles could reignite broader NFT interest. Prediction markets are expanding far beyond politics. And privacy-focused projects could continue gaining ground as government surveillance increases globally. Bear markets are painful, but they do serve a purpose. They clear out the noise, force projects to focus on what actually matters, and give serious investors the chance to position before the next cycle. With AI development accelerating, quantum resistance becoming a genuine priority, and regulatory clarity slowly improving, there's a lot being built right now that could reshape this space dramatically. 2026 is unlikely to be a straight line up, but there's plenty to be excited about if you know where to look. Here at Web3verse, we'll be tracking every major development so you stay ahead of the curve. Subscribe if you haven't already, and we'll see you in the next one.